You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block, everyone's favorite bi-weekly source for rants and all sorts of other fun things. No, everyone's bi-weekly source for all things options related. My name is Mark Longo from ye old OptionsInsider.com. Coming up on nigh a decade we've been doing that site over there. So I guess maybe it does fall into that category. In web years, we are ancient, a dinosaur, yet still kicking, still thriving, still rolling along over there. People always forget, yeah, you guys do a website too, don't you? Yes, we do. So surf on over there. We do a lot of cool stuff there throughout the day, including a lot of the UA we talk about here in a lot more detail, education, strategy, unusual activity, breaking news from the world of options. You get at least 15 to 20 headlines there as well. So all sorts of fun stuff. If you haven't bookmarked it, if you don't check it out on a daily basis, A, shame on you, and B, you should. It's good stuff. And of course, while you're there, you can always mainline our entire radio network just by clicking on the Insider Radio Network tab. We also put that player there on the homepage. You can just log in someday and say, hey, or just surf on it. You don't have to log in and say, hey, what's the latest thing on the network? I'm going to hit play on that. It's right there on the player for you. Or you can dive into your program of choice, whatever floats your boat. And of course, you can always find us in the usual suspects: iTunes, TuneIn, and Stitcher, and so on and so forth. Also via our mobile app, available for iOS, Android, and the beloved Fire OS. And joining me on the program, starting off way, way out there in a place that I think it's borderline whether or not it's even really in the continental U.S. I think it's broken off recently, the Duchy of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome to the program, to the Option Block program, sir.
The Duchy's still doing well, and I don't think they're going to secede.
So you guys
they're
not going to pull a Quebec and have a Mainer secession on your hands there.
You know what? And if we did, we'd charge everybody triple the vacation here, and I think the state would be quite prosperous.
It'd probably be a very low-key secession if it did happen. You know, Maine people not known for their fervor, kind of be like, oh yeah, okay, we're going to secede. That's actually not a bad Maine accent, if I do say so myself. And it'd probably be the lowest key secession in the history of time. Speaking of low key, he is not that today. He's fired up. We are joined by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. I hear you got a little hot under the collar today for the program, which we like.
Oh, I'm just kind of we'll see in a minute, I guess. But always happy to be here on the Option Block. Always my favorite show online. And folks, if you don't have the mobile app on your phone, shame on you. It is an awesome app. Get the Options Insider mobile app.
There you go. A unsolicited/solicited plug from Uncle Mike Tosaw over there at RCM. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show where we break down what was going on, what was rocking, what was rolling, what caught our eye in today's activity. And today, another interesting day, shall we say, on the old streets, if not quiet. Most of the major indices kind of yawning through the day for the most part. We had a somewhat surprising range in the S&P, about 10 handle range from high to low there, about out there in the S&P. But other than that, the rest of the action, not really a ton. Didn't even break the ADV out there in SPX. It's been averaging a little over 1 million contracts a day, doing about the old 666 number out there today, number of the beast in SPX. So about literally 2/3 of their ADV out there today. So a fairly quiet day across the board. Most of the other major indices following suit. Even though the Q is doing a fair amount of volume, even though they're pretty much unched on the day as well, pretty much hitting their ADV, and Dow also essentially unched on the day out there in good old Dow land. And of course, I think everyone kind of Dow doing about half of its ADV, a little less than that today. So I think everyone kind of keeping their powder dry ahead of tomorrow's misfed, opening up the old mouth again today and seeing what shall issue forth. We've been playing this game, it seems like, for quite a while now. We get to play it yet again tomorrow, whether we want to or not. So a lot of people kind of playing wait and see with that. Of course, all of this wondering and chin stroking, head scratching as to what will happen tomorrow, giving us a little bit of a tick up out there in the old VIX cash. We were talking not too long ago about vol perhaps being a bit on the low side when it was flirting with the 10 handle. Fast forward a week or so, and we're flirting with the 14 handle today. We close or ending the day right a little bit south of the 14 handle, 1393. Actually did break 14 ever so briefly. Only it got to about 1409, but couldn't sustain it, and ending the day south of the 14 handle. We'll see where we go tomorrow with Miss Yellen, if she chops the legs out from vol, if she gives us a little bit of an injection of new volatility, we shall see. All right, moving on to my cohorts, what caught their eyes in today's activity. We got to start with, because he's been burning it up all day. He's been writing me emails and IMs saying he's got to go on about this. He's super fired up. Uncle Mike Tosaw is known for a rant or two in his day. Maybe we'll start off. Uncle Mike, I'll let you play it by ear. If you want to start off with your rant on on all things EpiPen, shall we say, aka Mylan, that infamous biotech company out there right now, or do you want to start maybe with what caught your eye and then slowly build to the rant? Ranter's choice, sir. How you like to proceed? The floor is yours.
Ranter's choice. I love it. Well, I mean, I think that everyone is I agree with you, Mark, where people are keeping their powder dry until Yellen speaks tomorrow at Jackson Hole. I believe it's 9:00 Chicago time. So there really wasn't a ton happening. Oil was up slightly. But other than that, I'm really just nothing really lighting up my tape from what I can see. But with that, I'm going to go ahead and talk about Mylan. First, I want to kind of give a little bit of an education behind this and explain why Heather Bresch is on the darkest side of evil with what she is a part of, in my opinion. But anyway, first off, let's just get a little bit of a background on what this is. My son has a nut allergy, meaning that if he eats a nut, he will die. Now, thankfully, he doesn't have it to the point to where he can't smell it. There's plenty of kids out there that have that. If he's around a nut, it won't kill him or it won't hurt him, most likely. You never know for sure. But we as parents have to carry an EpiPen with us all the time whenever we go anywhere. Now, my son lives a very normal life. He's on his football team. By the way, he made a touchdown-saving tackle and caused a fumble in his game this past Saturday and made captain for this week. I say that for two reasons. Reason number one, to brag about my son, of course, but reason number two, to show that kids that have allergies are normal kids just like anybody else. But we've had to take my son in. We've had to give him an EpiPen twice in his life, and it's not a pleasant experience to spend your Thanksgiving in an emergency room. What happens is that his airwaves will shut if he has what's called an anaphylactic reaction to a nut. So these EpiPens are very much a needed life-saving device. Now, there's a company out there called Mylar. They're the company that makes the EpiPen. Now, with this, they have essentially a monopoly on this EpiPen. Now, within the EpiPen, there's a drug called epinephrine. Epinephrine is the drug that's used to basically give you just a shot that makes you very hyper, but it will open up your airwaves long enough to get you to the emergency room in case they need to open your throat to get air to you or whatever the case may be. The cost of the epinephrine that's in the EpiPen, I've done a lot of research on it. From everything that I can tell, the highest that I've seen for the cost of the epinephrine that's actually in there is actually around 15 cents for the dose that's in the EpiPen. Now, let's say that I'm totally wrong and my research is off. Maybe it's $1. Either way, I just want you guys to kind of get an idea of what this is. Now, with the EpiPen, with Mylar, that's their big product is the EpiPen. It makes it very convenient. It's something to where you can carry this EpiPen with you wherever you go, and it's one to where I can give the EpiPen to someone who might be babysitting my son and say, hey, this is how you do it. It's real easy in case he has an allergic reaction. It's a very easy process. And to them, they deserve to make money for that. I am all for that. So with this rant that I'm about to do, folks, I don't want you to think that I'm some utopian person that thinks that all money is evil. I spend all my days thinking, how can I make my clients more money? How can we make more money doing this? How can we make more money doing that? Perhaps this is how we can make more money. That's how I spend my days. So I'm not against people making money. However, there is a fine line between making money and just doing evil things to people. The cost of this EpiPen has gone up significantly through the years. You can't get an exact cost on what it would be because of the fact that just with the world with which we live with insurance, no one knows what anything costs. But for the most part, what they did is they raised the price to $650 for this EpiPen. Now, it's been as little as $100 in about, I believe, in 2011, but $650 is the cost of it right now. Now, thankfully, with the insurance that I have for my son, we have 4 or 5 EpiPens that insurance pretty much covered for, I believe it was actually free the last time we got it. But with anything, I'm not really upset for my family personally. I'm thoroughly pissed for the nut allergy community, for the people that may not have as good of an insurance plan that we've been blessed to have, that may not be able to afford the $600 to give their son or daughter the EpiPen with which they need. Now, here's the problem that lies with this. There's no competition to the EpiPen right now. There was a product out a couple of years, up till about a year and a half to 2 years ago, from a company called HPQ. It was actually more efficient than the EpiPen, and it was much smaller. It was much easier to use. It actually talked to you. You could actually have this thing to where as soon as you would open it up, it would say, HPQ enacted. And it would give you verbal directions as to how to do it. So it was even a more efficient product than the EpiPen. But unfortunately, it was taken off of the market because of the fact that the dosing was not right. And so they had to just stop them because I wouldn't want my son to all of a sudden have 10 times the epinephrine that he normally would have. And so they had to get rid of that. Now, at this stage, there have been several other companies that have tried to come up with some type of a competitor to the EpiPen. I'm not of the school of thought that government controls are the ideal way to go. I'm a capitalist, and I believe that capitalism can solve this problem. But the government is preventing that from happening. The reason is because of the fact that all the companies that have tried to come up with something similar to the EpiPen in order to become a competitor or just something that could be more efficient, something better. I'm not saying to take away the patents of the EpiPen. I understand that they have it patented. But if you don't like trading the SPX, you can trade SPY. I understand the CBOE has their patent on SPX, but if you don't like it, you can trade the SPY. There is no SPY in the EpiPen world. And reason for that, who knows? It's probably because of the fact that something along the lines of Mylan has congressmen in their back pocket. They have the FDA in their back pocket trying to prevent things like that from happening. But here's the bottom line, folks. Mylan is doing something that is evil. There's going to be people dying because of the fact that they can't afford to pay $600 for an EpiPen. And that is not right. So, Heather Bresch, I want you to know you're more than welcome to come on this show at any time. I would love to interview you. The thing that you said today on CNBC about coming up with these $300 coupons that, oh, we'll do this, that, or the other, it is a joke. The fact that you're charging for your product something that the drug costs 15 cents to put in there, and the fact that you are not disclosing what the costs of these EpiPens are, and the fact that you have a monopoly on this, and the fact that you have the government in your back pocket preventing capitalism from solving the problem, you are a disgrace to the human race. People will die because of this. Thankfully, I've been blessed to the fact that we can afford even if our insurance becomes horrible and does not cover any type of epinephrine in the future, we'll be able to afford the $500. But Heather, there's a lot of people out there who are not able to afford this, who have nut allergies. You need to be ashamed of yourself. And I hope that you can enjoy your $20 million a year annual salary while people are dying because of the actions with which you are taking. Heather, if you are thinking that, oh, well, if I'm not the CEO, this is just going to someone else is going to step in here and do the same thing, so I might as well make the money. Well, I hope you feel good about yourself, because the soldiers for Hitler's army used that as a defense that they were only following orders. Heather Bresch, you should be ashamed of yourself. That is all I have for today on my rant.
Wow, you know when you get to Hitler that things go dark. I can tell you're clearly passionate about this issue, sir. This certainly is an issue that hits everybody. I see this in my little guy's school. There's tons of kids that have to have they carry them around with them, or the school actually has them in the classrooms now. It's kind of just standard equipment. If you have any sort of elementary or lower school type thing, you have to have this floating around. It's just the nature of the beast. Unfortunately, that joke scene from that was at the Smurfs 2 movie where they have a birthday party and no kid can eat anything because it's all pretty much everyone's allergic to everything. It's kind of a joke, but it's actually kind of the truth. So yeah, I know this one.
It is. And the hardest thing, and Illinois just passed a law saying that schools and cops are going to now be allowed to carry them in case a situation like that occurs. And who's going to pay for that now? I mean, the tax dollars are going to be paying for that because of what they're doing. And it's a sad state of affairs that they have the government in their back pocket and they're preventing capitalism from solving the problem.
Mr. Rock Lops, I know this one hits home for you as well. Any thoughts, any additions, any addendums to Uncle Mike's rant of the week?
Well, he already went to the Hitler side, so you can't get darker than that. That's as dark as you can get. But I had the similar problem. My daughter just stepped on a hornet's nest. We live in Maine, and that's what happens. And they can put those things under the ground. Those hornets. Did you know that?
Oh yeah, that happens. You think being a nature boy like yourself, you would have known that. I guess you learned that the hard way.
I've stepped on bees under that you're in holes. I didn't make the connection because I'm always knocking the hornets' nests off the eaves. But anyway, so my daughter blew up like a balloon, and she looks like she was starting to have trouble breathing. So took her to the emergency room, and they jammed her with a pen, and we'll be paying full pop for all that stuff. And now we have to buy another one, and we're just going through the same thing. We're like, oh, okay, we have insurance, not as good as Mike's, and they don't pay for anything. So it's like, okay, I got to pay for something that is going to be no good in a year.
That's right. They expire every year. I forgot to even go into that. People have to pay $100 a year.
That made it even better for you. So I'm glad I could actually add something to the rant because it was so good. But anyway, so it's good to know that a female CEO and her dad is a Democrat from Congress can be just as, how shall we say it, unscrupulous as a guy. The glass ceiling is broken.
Yes.
The glass ceiling is broken now.
That's
women can be just as evil as men, and this proves it.
There we go. All discrimination has been set aside. She has broken the glass ceiling for hatred and Hitler analogies. That's good stuff, Uncle Mike. I'm sure a lot of people out there can commiserate and feel your pain And we'll keep on rolling because it is a trading block. And to what else is catching our eye out here, of course, GameStop. Not too many names still in the earnings cycle. A few still coming off, hitting the dregs now, including, we've touched on the gaming sector before on the show. It's kind of interesting. Activision, EA, others. GameStop being the major retailer in that space. They've kind of created an interesting little niche market unto themselves of the used game kind of business. Others have kind of leapt into that when they saw how much money GameStop was making, buying back used games for a handful of bucks and selling them for 20, 30, 40, 50 bucks. Not a bad market to be in. So they've been doing all right. Of course, that market a bit on the downswing. People were pricing in today. Well, let's see. GameStop closing today about 32.16 or so, up about 1.5%. So not a bad day for GameStop on a day when everything else was selling off. They were rallying and they're pricing in about $1.50 on that straddle, so right about 4.5% or so. And into the after hours right now, it's off about nearly $2, or about a little over 6%. So outperforming a bit to the downside, again, probably reinforcing the fact that used game bonanza, not exactly what it once was out there. Can't print money perhaps the way you used to, particularly with the onset of digital. How you used to be able to just sling those discs for free money. Perhaps not the case anymore. Mr. Rock Lobster, and all the hype over EpiPens we never got a chance to see. What was catching your eye out there in today's activity? Was perhaps GameStop lighting up the pit chat? And if not, what was?
We saw we couldn't figure out if there was some call selling on it. We looked at it briefly. It looked, just the options look kind of fairly priced. Around $2, something like that, $2.50, and it's about where it is. So it wasn't as exciting as all of that. Funny enough, I did a blog on Mylan 3 days ago on this very subject, just because we ran into it, and then all of a sudden, it was all over Twitter about this. So anyway, go to the Option Pit blog. I said buy some puts. It was very timely because now that Hillary of all people has put Mylan in their cross sites, so you know that. You know what she did to VRX last year, so I'm sure she's going to do it to Valent, and then I guess she'll do it to Mylan this year. You don't have Bernie shaking his fist. That was much tougher. As far as this, like a strange lift and vol today, actually VIX hit 14, and I think maybe the SPX was down 0.25%. So there was a pretty good lift in VIX. Probably a good opportunity to buy puts. And as of right now, it's for whatever reason, since there's so little going on, I think somehow the central banks have managed to throw such a massive wet blanket over the market. I didn't even think it would be possible. I thought at some point everybody would be like, all this central bank intervention is crazy and it's going to make people real uncomfortable. And I swear, I think they have a chokehold on the market, and it just is not going to go anywhere. And maybe Yellen says something that takes that off tomorrow. I don't know. Gold's been soft because of it. You can't get treasuries to move anywhere. So I guess we wait again. Like, oh my gosh, every 2 weeks or every month, the Fed's got to say something, and supposedly the market's going to move. It's become such a drag. It was fun when it really moved a lot, but now it just, the 2 weeks of what do we have? I think we have 33 days of sub 1% moves. I don't think we've done that in forever since they've been keeping that kind of data. So, there is not a ton to watch move because nothing is really moving. And even our guys that like to sell premium are finding it hard to find something to sell. So it's just not an easy environment. It's not an easy environment to make money. Because even if you're long, you're not getting anywhere because we have besides just selling literally at the money puts for very low prices, I don't know where else you're making money. Maybe today, obviously, the skew did kick up a lot. In the near term because of whatever Yellen might say. So there's an opportunity to sell some downside there. But other than that, that's about all she wrote. Just a real quiet day.
Indeed, that is all she wrote for the trading block. And now we're going to keep on rolling into the dark side of the business. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. This, of course, is the Odd Block, the portion of the show where we break down the darker, the shadier, the more dubious side of the options market, so you guys don't have to. It's our favor. It's our community service to you guys out there. Going to kick things off. Actually, looking back a little bit, a whole whopping 24 hours, Mr. Rock Lobster. To some calls. We didn't actually profile on the show because we didn't have a show yesterday, but we did profile on the website, The Options Insider. Again, that's why you got to head over there every day, see what we're talking about in between shows. Yes, there is a life outside of the radio. It's on the website. We were highlighting yesterday, looks like what we could easily characterize as home run calls going up out there in Hewlett-Packard, ticker symbol HPQ. Of course, this was, of course, they had earnings yesterday. I believe they were after the bell. And at the time, yesterday, it was printing around 14 and a half or so. And it seemed like someone was thinking these earnings are going to be a nice little home run for them and started gobbling up some near-term upside to the tune of starting off with a block of 14,000 of the SEP 16s, gobbling those up, lifting the offer for a dime. As the day went on, the size increased on that strike to a total of about 26,000 total going up on that strike. Well, fast forward a whopping 24 hours, and we see that the old earnings rally, the post earnings rally, I should say, didn't really materialize. Hewlett-Packard down quite a bit today, actually hitting a low today of 13.5, which is 13 double, which is fairly out of that range before rallying a bit to close at 1437. But all of that means that those SEP 16 calls that were so nice and juicy just a day ago now pretty much have evaporated to nothing. People write in all the time about earnings premium. How does this materialize? How does it look in the marketplace? Well, there you go. Here's a perfect example of it. At the end of the day, these things were a penny bid at 2 cents. So he paid a dime, and now if he's lucky, if that bid's still there, he could wipe them out for a whopping penny. That works out, that 9-cent loss on the initial kind, about $126,000 total on all the volume on that strike. If he did all of that, there might have been some back and forth as well, but if all the volume on that strike, about 225 or so thousand contracts, of course, plus commissions, $1,000 to say plus commissions. So not exactly a cheap proposition. Of course, surprise, surprise, they're still open. He hasn't taken those off. I guess he decided the commissions were not really worth the hassle. And hey, he has them now. He might as well see what he can get. It's not without the realm of possibility that this name could gap up about $1.60 or so over the course of how many days exactly does he have? He has 22 days to expiration. So he's got about 3 weeks to have something happen. At this point, might as well keep him on and see what goes on. You've already lost just about everything on these things. So interesting stuff. Mr. Rock Lobster, we'll start there. Looking back, a whole whopping day. Someone swinging for the fences around Hewlett-Packard earnings, only to instead knock the ball into the dirt and essentially have the catcher tag him out.
I have to say, it was quite a swing, wasn't it?
Yeah, he got up there. He swung as hard as he swung. He swung as hard as he could. I'm making up words here. Uncle Mike still got me rattled with his Hitler.
He did the big swing. Yeah, I mean, I think HPQ is like one of those fundamentally very cheap stocks because they make stuff that I guess is a commodity. At this point, HPQ is the, they do that. I guess, do they do, that is the printing group, printing personal systems and all those business segments. So it's one of those things where somebody was looking for a pleasant surprise, and it doesn't look like they got it with earnings. And it even looks like the results weren't terrible, but not enough to make the other twin of Hewlett-Packard. I guess they split their services business off. Wasn't enough to make it happen. And buying upside calls, as we say on the show, you need something good to happen to make that work. So Doesn't mean it can't happen. It's going to be tough.
Yeah, we like these kind of examples, not just to rub this guy's face in it, even though there is some of that, of course, but also just to illustrate the dangers of coming in and loading up on out-of-the-money premium going into an earnings event like this. Because as we said many times, earnings kind of like a balloon. That balloon fills up with that volatility juice, that volatility helium. Call it what you will. And after the number, unless it's a big surprise in one direction, it's going to pop. And this is a pure example of getting caught up in that popping and not really coming out the other side. Much the better for it. All right, moving. I'll keep an eye on these. Maybe this could turn into a home run. He can get lucky and he can have this thing rally to 17, and he's smiling all the way to the bank. But probably not. We'll keep an eye on these though, just to make sure. He's got 22 days to make something happen. We'll see what he can do. Meanwhile, let's roll on into rolling, pun intended in this case, to another side of the fence. This is United Continental Holdings. Yes, that combo airline company closing today, $47.53. Pretty much unched on the day. Wasn't a big moving day for UAL today either. His name averages about 13,000 contracts a day, so decent paper. From an odd block perspective, doing about 24,000 today. So lighten it up today. About 14-1 calls over puts. That should give you some inkling of what caught our eye as I scroll, listeners, all the way down. Not to SEP, no, not to OC, not even to DEES. All the way out to Jan 2017. This is where we find our quarry today here in United Airlines. In particular, a fairly sizable vertical going up out here was the Jan 2017 52 half 55 call vertical going up. Looks like paper is buying the vertical, so they bought the 2017 52 halves 10,000 times for $2.24. Turns around, sold the Jan double, aka the 55s, 10,000 times for $1.52, net paying 72 cents for this $2.50 vertical. So you can take that for what you will, but it's interesting enough, not just the size or how much they paid for the vertical, but also the open interest, size open interest on the doubles, about 12,000 contracts open on those doubles. So looks like our friend here perhaps selling out those doubles and readjusting, rolling down to a little bit more relevant strike, the 52 halves, so only about 1,500 contracts open there. Interesting stuff. Again, also picking up some deltas by rolling down to a little bit meatier strike as well. Looking back at the recent chart here of good old UAL, it hasn't really moved a heck of a lot over the past few months. It's kind of been kind of glued around that 44 to about close to, I flirted with 48 very briefly. So it has about a $3.50 range back and forth over the past couple of months, but it hasn't surged to the upside north of 48. So our friend here clearly taking advantage of this opportunity to perhaps saying, I was a little bit optimistic on my doubles. Maybe let's roll those down. I'm willing to pay 72 cents for the privilege. Mr. Rockofficer, what's your thought here? You think this is a good do, as they would say on the floor, paying 72 cents to beef up his deltas and get a little bit closer to the old fire?
You look at that and you're like, why bother? I guess, I mean, you look at that and you're like, okay, the guy wants to try to Jackson, but he's got to, it's most likely the way it's priced, maybe I think he's putting more money into to a trade that really probably hasn't made him any money. I'm just looking UAL. Again, I'm sure it was hard to find the original trade, but unless he really scooped the bottom, I don't know why you would roll up. If you're up money on a trade, generally you roll out of something to take the money off the table and then, be able to hold some deltas, but you have basically the calls for free. So I'm not much of a fan of the rolling down idea, mostly because you got to spend more money and you've been wrong anyway. So, it doesn't mean it can't work, but, you're just spending more money on something that's really not working instead of trying to roll something that is. So we'll see. It could work. UAL could get back to those highfalutin, $60, maybe get back to the 70s, but, it's a far cry from when oil prices were way up there. But airlines again, all of a sudden they make a lot of money. I don't remember them ever used to make a lot of money, but they sure seem to be making money lately. So
fancy how that works. You have essentially one cost, one risk, and it's been in the toilet for the better part of the past 2 years. Yet all those amazing fees that you tacked on back in the days when oil was north of 100, the baggage fees and everything else, surprise, surprise, those are still there. So your main cost has gone away, and yet you're still charging like it was. So, hey, I can see why they're not a bad business to be in right now. I don't know, oil gets back around 100 level, and let's say WTI, maybe not so much. But right now, I think it sounds like, yeah, you're right, a pretty good deal. And I'm with you on those calls. Not exactly my chosen methodology. If you're going to roll, typically you buy yourself a little bit more than just a little bit closer to the money. You want to go a little bit farther out, a little bit more time, something along those lines. You have more of a reason to roll rather than just, I was a little bit over-optimistic on these. Let's roll these down and pay more money just for that privilege. I'm kind of with you on that. I'm not a huge fan of that approach. You might as well spend a little more, get yourself a little bit more time or something else along those lines that could be probably a little bit more helpful for you in the long run. As we move on to our next name, this is... I can't do an odd block today without something either in mining or energy or something, gold and resource related. And we're going to go this time to Goldcorp Inc., ticker symbol GG. Good game. Closing today, $16.06, almost literally unched on the day. So it wasn't a rock'em sock'em robots day for GG today either. This name does about 15,000 contracts on a given day, doing about 60,000 today. So about 4x, pretty aggressive. Doing about 5-to-1 calls over puts. And once again, listeners, we have to scroll all the way down, not to AUG, not to ACH, not to SEP or anything like that, or even DEES, all the way out once again to Jan 2017, where I think you can loosely describe this, Mr. Rock Lobster, just got to get all the calls, because that's effectively what they did out here in Goldcorp. Something lit up, some algo, something else that said upside is where the action is. Pretty far out of the money upside as well, to the tune of the Jan 2017's 25 calls and beyond. Pretty much everything on that strike range from the 25s all the way up to the 31s was lighting it up today. Let's start with a block we saw of 4,077 of the Jan 30 calls. Paper gobbling those up for 11 cents. We also saw about 3,000 of the Jan 29 calls getting gobbled up for 12 cents. Jan 25s for 21 cents, 2,500 times total on each of these strikes. The 25s is 5,600 contracts today. 26s was 2,400. The 27s, the winner with 8,091 contracts. The 28s, 1,500. The 29s, 5,500. The 30s, 5,100. And the 31s, a whopping 500 contracts out there. So people had to have themselves some upside. And this guy wants to spread his deltas, spread his costs across all the strikes. This goes beyond the stupid. Stupid's usually 2, maybe 3 strikes. We've got 6. So this is something else entirely. This is a stupid, extra large, extra stupid XL. Call it what you will. Interesting one out here. Also worthy of note, about 8,000 contracts open on the 25. So I don't think that is, but there is potential maybe he is perhaps closing out of those and rolling up to another strike. I don't know why you would do that, but hey, we just talked about someone rolling down in the same month in Jan as well. So funkier things have happened, maybe not for the same size or for the same amount. Mr. Rock Lobster, start where you will here, because it's call palooza in Goldcorp, the only way you can describe it.
It is a call palooza, not spending a whole lot more than 22, 23 cents. Could be a little rolling on part of them, but just a massive amount of calls trading. Again, the only thing I see is, because I think GG, what was the lower for it this year? Like $4, I think, something like that. We've had a little bit of a pullback. Yeah, the low for the year was 942. So it's up a good, 60s, like 80%, something like that. So the breadth of the move in all these gold miners has been huge. So maybe just somebody's looking for, crazy town by the end of the year. That gold goes off the hook, and the miners continue their huge run. There's been a pretty big pullback. Like the market hasn't done much in a few days, but all the miners have, all the gold miners anyway, have pulled back huge. So I'm just guessing somebody wants this upside somehow, and they're just kind of buying everything. There could have been some closing there, but still, one way or another, somebody's buying something up there.
Yeah, that's the euphemistic way to put it. Someone is buying something out there in GG. This time they bought all something out there. Just a ton of calls. Again, listeners, let us know, why would you ever consider coming in and just sweeping so many strikes like this? Or you, like me, you prefer to keep your trades a little bit more focused, laser focused, if you will, rather than this shotgun, or perhaps in this case machine gun approach? Let us know your thoughts. You know this is an epic back and forth for us here on the Old Stupid as we move on into our final name victim of the Odd Block session for today. Getting a little bit closer to home, September this time, for Big Lots, ticker symbol BIG, appropriate enough, closing off, taking on the chin a little bit today, off about $2.38, or about 4.3% to close at $52.94 is the name it does. About 1,100 contracts a day, doing 24,000 today, about 6-to-1 puts over calls. That should give you some inkling of what caught our eye today, and in a similar fashion to our friends out there in GG, where they had to have all the other money calls. These guys had to have all of the other money puts to the tune of the SEP doubles, 52 halves, 50s, 47 halves, 45s, puts, all being very active out there today. What we saw in particular was the SEP 52 half, 47 half put vertical going up 2,000 times. Paper buying the SEP 52 half puts, doing that for $2.60, turning around and selling 2,000 of the SEP 47 half puts, doing that for 85 cents. Net $1.75 for that 52 half, 47 half put spread, doing that tied to stock. That's worthy of note as well. So this was indeed delta neutral. Like I said, that was kind of just the beginning of the put palooza out here. Also we saw doubles, we saw 50s, we saw all those, even 45 puts going up to the tune of about 3,000 to 4,000 contracts, almost every strike out there today. So heavy action. Also worth noting, earnings are before the open tomorrow, and if the news today and the movement today is any indication, people not exactly too optimistic on what they're about to report, but we shall see. Mr. Rock Lobster, take us home on this put palooza here in Big Lots.
I think even with the stock, it seems like they're kind of pushing a little onto the upside, at least with this put spread trade. You buy put spreads and you buy stock kind of bullish, but they just want a little protection in case things get ugly. The stock was down a bunch, but for a lot of the retailers have kind of surprised all of a sudden. So I see they're like the bearish. The puts are definitely bearish, but again, tied to stock, that makes things a little different. It makes them look like they just want a little protection going in. So we'll see. I'm not so sure on this one because all these little dollar retailers have been doing okay lately. So we will see. But obviously, it's a lot of pre-earnings action and. But puts in stock, generally, if they buy put spreads and they buy stock, they want the underlying to go up. So we will see.
We shall see. We shall also see, because it's Thursday, we'll see if Uncle Mike has calmed down from his epic rant at the top of the show and see if he has a strategy block in store for us.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block. It's Thursday. It's a time of the week when Uncle Mike usually comes down nice and well-rested and even keel from the mountain to dispense some options, wit and or wisdom. He's had about 20-odd minutes, listeners, to relax a little bit. So let's see. Let's see if he's got something for us. My minions, they won't even tell me anything. They were too scared off by that opening rant. They wouldn't even do any investigating. So Uncle Mike, I am literally flying blind. They did not earn their jams and jellies this week. But what do you have in store for us on this epic Thursday strategy block, sir?
Yeah, I hope the minions have good workman's comp. There was they took a little bit of friendly fire. Tell the one that I'm really sorry about what happened to the one minion on that rant. But anyway, what I want to go through today is what to do, just an idea for the covered call trader out there when the covered calls really aren't paying a lot at this point. Volatility is low, and you want to have your covered call trade month in, month out, and I've gone over this on the show before, but I want to use some more specific numbers today to kind of go through something. Let's take a look at SPY. Now, full disclosure, my positions in SPY right now are not what I'm about to say. I've gone over them on the show before, but this is just more for a monthly covered call trader of what I'm going through, of what I'm discussing right now. And my positions on SPY are not that right now, but we do have some other monthly covered calls we're doing, just not SPY. But I just want to use this as for purpose of example. SPY right now closed today at 217.70. And I'm just going about a month out for the September 23rd expiration, 29 days from now. I'm looking at the 218 calls for SPY, trading at around $2.30. So that's about a 1% piece of income. I hate to call it a dividend because it's really not. But if you were to do something at the money for 1% right now, that means if SPY stays the exact same, you would have a 1% profit over the course of 1 month. Now, of course, the advantage of that is that if SPY goes down, then you're better off doing the covered call trade than just owning the underlying, because the short call will expire worthless. The same would hold true if SPY were to stay the same. The disadvantage, of course, is if SPY goes higher in value. A lot of times advisors, what they would do is they love pitching covered calls to people because of the fact that the advisor is always right on the covered call. Should the stock stay the same? Well, obviously the advisor is a genius because of the fact that stock stayed the same, the call expires worthless. Stock goes down, then the advisor is able to say, oh, thank God you sold that covered call then. You made income on that, and you can hold on to the stock, and you can do it again next month. Well, even though you lost money on it, it still makes you feel good, and the advisor gets to feel like he did something good for you, when in reality you still lost money. So that's another thing about the covered call. And, of course, the main disadvantage of the covered call, besides the underlying going down, but which you would have with the stock, but by comparison to just owning the stock outright, the main disadvantage of the covered call is the opportunity risk that exists, in that should the stock go significantly higher, you would not participate on that because of the fact that you had sold that call against it, and you're obligated to sell the stock at the strike price with which you sold it. So in this day and age, with volatility as low as it is, it's hard to find good premium, is what a lot of people are saying. So this is something that I would like to just kind of go into a little bit more detail on, of what you can do in a lower volatility environment that may make some sense for you. We've talked about selling a call spread in lieu of a covered call many times on this show, but at this point, I want to show you what I think might make sense for you if you are a covered call trader, like a lot of people are, that like selling calls just a little bit out of the money. For example, with SPY at just under 218, if normally you would sell the 218 call to get $2.30, well, I don't know if you really want to give up that much upside. I know I wouldn't, just for $2.30. But here's an alternative to that might be able to get you a little bit of income that might make sense for what you're doing. Let's say, for example, that you were to sell the 220 call. Now, the 220 call you can get roughly $1.25 for. It's right now the closing bid ask was $1.21 by $1.26. But let's say you were to sell that. Simultaneously, what you could do is buy a 223 half call, and then instead of giving up total upside, what you're giving up is $3.50. But you're giving up the upside between 220 and 223 half, and you're getting approximately $1 for doing that. So instead of giving up all your upside, you still have upside from 218 to 220. You're giving up the upside from 220 to 233, but you're getting $1 for giving up $3.50 worth of upside. So let's say SPY just goes to 230 over the course of the next month. It could happen. Stranger things have happened by all means. Instead of giving up all your upside, you're giving up a portion of it. Should SPY stay the same, or go down, you get $1 for your trouble. So I'm not telling you anything new hopefully I'm not telling, unless you're a beginner listening to the show, but for most of our audience, I'm not telling anyone anything new. But what I'm hoping to accomplish with what we said today on the strategy block is that there's an alternative of something you can do when you have low implied volatility and you're just not getting the premium that you would normally get if you're a covered call person. Look to the call spread. I think now is a good time to look at that in lieu of a covered call, if that's what you're normally used to doing. So that is my strategy block for today. And I have to say, I'm not shaking like I was a half hour ago for some reason. I don't know.
I guess you took an EpiPen and it just it calmed you down, even though it was a $700 dose. So maybe that price tag will get your blood boiling again. Let's see, it's Thursday. Let's see if we can squeeze in at least one or two here on a quick edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Of course, the portion of the show where you guys get to chime in with your thoughts, your questions, your ideas for us and for your fellow Option Block listeners. Our question of the week is coming to a close here. Got about 24 more hours on. If you haven't voted just yet, head on over, do just that. Follow us at Options on Twitter. We asked you guys beginning of the week. USO was at $11 as of the time that we posted that on Monday. Let's see where it closed today. $10.95, so pretty much unched so far this week. It was up about 19% so far in August. At the time of the SEP at the money straddle, 80 cents. The $10 put, 10 cents. The 12 call, 9 cents. We asked you, what would you do? Would you sell the straddle? Would you buy it? Would you do a combo, maybe buy the put or do the collar, buy the put and sell the call? Or would you turn around and sell the put? Or would you maybe do the bullish risk reversal, sell the put and buy the call? So you guys, we've had a few more days for this poll to season. Mr. Rock Lop, so we'll start with you. I know you don't really have much internet out there, so I know you don't have Twitter, so I know you can't cheat. What do you think is winning our poll? I think last time on Monday you were leaning towards the buying the put. Are you still leaning that way?
I am, but I don't like it, but I am. But I don't like it, but I am. But I don't like it.
Well, there you go. There you go. Don't like it, but you do. But you got to do it. Miss Uncle Mike, what's your thoughts, sir?
Same as Andrew. I think that what the audience is saying is buying the put, and I agree. I don't like it, but I think that's what they're saying.
Well, you both said that on Monday. It was not correct as of Monday, but we only had like an hour or so into it. About 4 days later, actually 3 days later, but 4 days total into the poll, we can see that buy the put is still not winning. It's an actual tie between selling the straddle and buying the straddle. So people are completely mixed. 35% each wants to sell or buy the straddle. Only about 20% want to sell the put and or do the bullish risk reversal, sell the put and buy the call. Only 10% want to buy the put or do the collar out there, which is kind of interesting given the fact that that's how the option paper has pretty much been lining up out there. It's been all heavy to the puts and not much love for the calls for quite some time, particularly in a product like USO. We remarked on it in Vol Views last week that it's super put rich out there, which is attractive maybe for the latter. That's why we put in that bullish risk reversal out there, see if that would catch a few. Certainly nice to see that that's where people are leaning. Our audience a little bit more savvy than most, but still interesting stuff out there. People are not going the way that the options paper appears to be leading. All right, that's all the time we got for the mail block for today. We'll get to a lot of them. Monday is mail block time, listeners. So that's when you get all your questions answered. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, a lot of things to keep an eye on. We mentioned GameStop at the top of the show. Let's see how our friends there are faring here as we're winding down the program. GameSpot off $2 now, or a little over, nearly 7% now, $2.15, nearly 7%. So dramatically outperforming its straddle so far. Again, I guess apparently the digital weighing a little bit more strongly on their physically oriented business model than perhaps the street likes. We'll see how that opens up again tomorrow. Other than that, though, the big thing everyone's got on their mind, that everyone's watching for tomorrow is, of course, Miss Yellen once again popping her head out of her hidey hole to do the will they, won't they dance, give a little bit more clarification onto what they're doing. I'm with you, Mr. Rock Lobster. It kind of is a bit of a crazy, it's kind of getting a little bit almost ridiculous. I agree with our comment here from Alan D. He writes in and says, "Will Yellen please shut the F up? She's ruining the market." Kind of hard. I don't know if she's ruining it, but it is certainly kind of hard to think exactly, these myriad debates in the public spectrum, if they're really beneficial or not at the end of the day. But we've gone down Fed Road before. That said, Mr. Rocklops, I'm going to wager that's what you and the people in the pit chat have your eyes on tomorrow.
Yeah, it's one of those things where, if it's a nothing thing, you got the Fed wet blanket and, I guess we have some economic growth and we don't have, some economic growth, not a lot, we have some, and we have no panic, and then apparently all this low interest rate crap will work for everybody else, and somehow these economies will all start to work again. Yeah, I don't believe it, but that might be enough to get everybody happy about the U.S. again, because we actually have positive interest rates, which is that's, I think, part of the thing that's affecting Treasury prices. Supposedly they're trying to raise interest rates, but bond prices keep going up because they're the only AAA rated bonds that pay interest. Or I don't know. I thought Moody's downgraded them, or S&P downgraded the U.S. a long time ago. So whatever that is. But I think, if it's kind of a non-surprise, you could see 11.5 tomorrow. You could see a total VIX crumble, because who wants to own any kind of option when the market is moving less than, at 0.1% a day? Everything stinks. So I had to go back to 2006 to find the last time the market was this unvolatile, which I have a feeling back then there was too much liquidity kind of squishing stuff, and I have a feeling we've got the same thing happening 10 years later. And of course, you knew what happened 2 years after that, this little thing called the financial crisis. But who knows if it will happen? Who knows if it will happen? But
I like that, unvolatile. But you're right. Our old friend, Mr. Schlesinger, did email me this week from former Volex, now of Real Vol fame. And he was saying that as long as they've been calculating their Real Vol index, which, they do 21-day realized volatility, they hit a 41.92 on the 24th, so yesterday. That's the lowest they've ever calculated so far. So if you're looking for realized volatility out there right now, it ain't there. So perhaps maybe looking at that 13, where do we end the day in the VIX cash, 13.63, with a little bit different perspective when you hear that. Uncle Mike, take us home, sir. What are you watching for the rest of this week into the weekend?
The Yellen thing. I think that the risk is to the downside on this for the most part, in that if there's a surprise that it's going to be a downturn in the marketplace, I don't see them saying, we're not going to raise any rates and then it's going to go way higher. But the reality of it is that I don't think she's going to tip her hat that much anyway. She's just going to maybe say something, and then all the financial media is going to say, well, she said this, but could it mean this? And everyone's going to debate over what it meant. And I think I'm saying a resounding meh is what I'm saying for tomorrow. And that's what I'll be watching.
All right, listeners, that music means we've come to the end of yet another epic journey into the world that is the option block. Started off with some VIX, and then dove headlong into EpiPens and Hitler, and then into some unusual activity in gold miners and Hewlett-Packard, all sorts of other fun stuff. Dove back into some juice for your covered calls, talked about your thoughts on USO, and then wrapped it up with all things yelling and the lack of realized vol there. It's been quite a journey. It's always a fun journey where we start off versus where we end up. Always fun to see on the old Option Block program. But before we go, one last time, let me check back in with my cohorts, my partners in crime, see what they have cooking. Let's go reverse order. Uncle Mike, what's cooking with you, sir?
Hey, if you guys want to work with an advisor who will work with options and work with someone for as little as a couple $100 a month, call me 312-212-3531 or send me an email at mtosaw@rcmfs.com. As the fall comes, I will be not closing the offer, but we might be taking a break from new clients for a while because usually in the fall it typically becomes busier for us. So call now while you still can.
There you go, listeners. Offer is literally limited. Reach out to Uncle Mike and pick up his book while you're at it. Go long. Mike Tosaw, Tosaw over there on Amazon is how you find it. And last but not least, Mr. Rock Lobster, what do you guys got cooking in the land of the pit? Maybe some classes, some webinars, some chats. What's up in the land of the pit?
Well, we have all kinds of education, but we have Saturday education going on, weeklies, especially in this very, very low volatility environment. Could be helpful. Weeklies, I'll be doing time spreads. Mark will be doing butterflies in the weeklies. And we hope that will get your learning on because that's what we all need. We need to learn a little more. All of us.
There you go. Get your learning on over there in the land of the pit, optionpit.com. to learn more. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for joining us live. I even neglected to mention at the top of the show, but we do stream the show live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. You too can join us live there in the Mixlr chat room. Listen along, see how the sausage is made. Maybe ask some live questions if you're among the brave and the bold there. All sorts of fun stuff. Mixlr.com, just search for us, Options Insider, to find us, or follow us on social media. You can get the link there as well. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.